Good morning. What's up, guys? How we doing? Hope we're having a good Monday so far. Hope you guys are rested up over the weekend because we have work to do here today. Now, market so far. 5-minute chart is top left. 2-minute, which I think we're going to be executing off the 2-minute here today, is top right. Of course, daily with New York sessions only is on the bottom. We are 1,000% today in a range market. Okay. You look at the 2-minute, it's kind of crazy. And then, you know, on the daily, it's also a range market on the daily. So that's our first job of the day every day, is to determine what kind of market, what's the context on the daily, and then what's the context intraday right now. Today we have range on the daily, range intraday. What does that mean? A lot of limit order scalping and maybe some stop entry scalping in the lower ends of the ranges for reversion, or in the higher ends of the ranges for reversion back to downside. Make sense? That's the plan here today. Let's see what we can get. Exposed, good morning. Roy, Taz, Dominic, how we doing, guys? Good to see you. All right, now it seems to me that the bears want to at least try to break this out, but to the downside, that is. Take out the low, but we'll see if they can. Again, range market. If they do, we have to assume it's probably not going to go very far, and if it does, that's fine. That gives us more information. Hey, maybe we end up in a bit more of a downtrend. But again, probability when you're seeing this, I mean, what does that tell you, right? We're getting a lot of wicks, wick. It tells you there's a lot of indecisive nature to the buyers and sellers here today. For that to all just fall apart, and the market to fall off a cliff, usually requires something to occur. Okay, usually, right? We deal in usuallys and probablys and probabilities in general. We're not dealing in certainties here. You deal in certainties, you look like a fool, and you lose money. Lose. How we doing, guys? Good to see you. Rick, Brandon, Clark, good morning, guys. Gaines, good morning. What's up, brother? All right, heading back up into the range here, as discussed. Let's see, what I'm really interested to see here is on the 2-minute, well, I guess both the 2 and the 5. Like, you look at the 5 up here, I want to know if this turns into a collapsing wedge, in which case then it's going to break out one way or the other at some point, but tighten down and then snap up. Snap. In either direction, not necessarily up, just get snapped up is what I mean. But I want to see if we can get a reversion and take out this wick. If we do, then we're not likely to go much further than this region, right? And that gives us a lot of good information, so if the bears could just give this up down here and let the bulls do their thing, it would let us get that information, which I think we need. But right now, to me, with the information we have thus far, it's looking like a wedge, which is fine up until a point. When you get that wedge tightening down too much, the reward to risk, at some point, you can no longer really make sense of it. You know, so let's see. Again, the bears still want to try to take out that low. I'm not sure they're going to be able to. Let's see if they can. Hi, good to see you. Trading Chris. What's up, man? How we doing? Galanow, good morning. Okay, so I mean, we look at the 2-minute, again, top right. The range on these bars, just in the last like 10 minutes, is absolutely collapsing. I mean, you see this? We were getting good volatility and now collapsing with a lot of wicks. So this here, I would look at this and call this its own kind of channel. But I want to see that break. Because, I mean, realistically, we're looking at less than 20 points. And that can be very, very tough. So I want to see this break. See which direction it decides to break, and then we can actually maybe pull off a trade or two. When it picks a direction. Probably, again, a lot of mean reversion trades here today. I just don't buy breakouts of the overarching intraday range. This. Right? Doesn't mean it can't break here and go an extra, 10, 15, 20 points. It's just probability-wise, it's probably not going to go all that far. And if it does, that's a surprise. Okay, and then we readjust. So here we go. Bears are kind of getting what they wanted. Let's see what they do. Marshall, how we doing? Chris K. What's up, brother? So, what's up with you guys? Have you guys taken trades today? Now listen, I know some of you guys this morning probably got caught on this. Oh, you can't really see it very well. On this break, on this break, on this break, on this break. It's okay. Listen, this is one of the hardest things in trading that no one really seems to discuss, probably because they haven't gotten to the point where they have to understand that yet. But I know a lot of you got caught on those breakouts, and I know some of you probably recognized the range market early on and decided, hey, instead of buying this break, I'm going to short it. Right, because, range market. So, if you did get caught, it's okay. I don't think you should feel too bad about that. That doesn't make you a bad trader. That's one of the most difficult things to really internalize and then recognize in real time. I mean, you're going to make mistakes. Right, you're going to see something and say, you know what? This kind of looks like an ascending channel. Let me buy this, the 5-minute. It was cleaner on the 2. I'll show you on the 5. And let's buy this for a break. Ended up being a range market, okay? In hindsight, that's a mistake, but we're always living in a fog, right? You're trying to make the best decision you can, but as long as you're trying to understand the context, don't beat yourself up. Now, if you took a trade this morning and you got caught and you weren't trying to understand the market context, it didn't even go through your head, then that's something you need to think about. But if you were trying to figure it out and you just got it wrong, it's okay. As the day goes on, you get more and more information of what kind of day it's probably going to look like. Lord of Fuse, good to see ya. Good morning. Okay, so this that we drew earlier, this is turning into a flat. You guys know how I feel about flat tops, so we have this kind of thing going on. It wouldn't surprise me if we saw the bulls try to break this through. But this little garbage, this needs to break. This is just killing volatility. So, you know, when this breaks, because it's going to, I think in a range market like this, you look at the 5-minute top left, it is so wicky. I'm gonna stick to the 2, which I've been executing off of the last few days. A little quicker, of course. But when the 2-minute is smooth, I like the 2. When the 2-minute is not smooth, I have to go to the 5. But lately, we've been seeing a little bit more smooth of a 2-minute. So we're going to rock and roll with the 2. Gives us more trades. You guys know, I mean, this is really a game of sample size. I'm not interested in taking more trades because I'm bored or for the sake of taking more trades. It's very clear that to understand that, right? I'm interested in taking more trades in the way that the casino is interested in dealing you more hands of blackjack. When you have an edge, it becomes a game of nothing more than sample size of trades that retain the edge. Right? So the casino, when they're playing against you as the player, I feel like when I make this comparison, some people think I'm talking as if we're the player. No. I'm talking as if we're the casino. But the casino has an advantage over trading because they have their edge baked in always. They don't have to think about it. They make the games, they set the table rules, and they always have an edge. But traders have an advantage over the casino because our edge can be bigger, right? There's a set and it's small because they have to attract action. If they have a huge edge, no one would play. People still play, but maybe less. Maybe the smarter individuals would stop playing. In trading, though, our edge is never defined like that, which, you know, unfortunately is the truth, but on the bright side, it can be much, much bigger. So that whole, like, you know, I take one trade a week, sounds very attractive. It sounds like you can just go golfing all day and not really work very much. But in reality, okay, you're taking, let's say you take 2 weeks off, you're taking 50 trades a year. Man, if you have a weighted coin, let's call it 55% heads, 45% tails, and you flip that thing 50 times, you're not necessarily going to see more heads than tails because you're dealing with it in a small sample size. Right, so you got to get the sample size up, which means as many trades as humanly possible with edge, okay? That is the kicker. Not just as many trades as humanly possible, because most people are going to have a negative expected value. If they take a lot of trades, they're going to lose money that much faster. But for traders with an expected value, meaning with an edge, meaning the more trades they take, the more money they make, just that is going to occur. The more trades you take, the better you're going to do, and the smoother the equity curve. Johnny, saw an article where multi-million-dollar traders trade 4 to 5 times a week. Yeah, sure, maybe some of them. Maybe some of them trade 4 or 5 times a week. There's a lot of multi-million, which is, I mean, shoot higher than that, by the way. There's a lot of multi-million-dollar scalpers who trade 40 to 50 times a day. You have to understand, what gets publicized is what sounds cool. You know, and trading 4 times a week sounds great because it doesn't sound like you work very much. So it gets passed around. It's not necessarily the reality. There's a lot of ways to make these numbers work, okay? All right, there's a big break through the low of day. Big wick back upside out of the 2-minute bar, man. All right, let's see how this bar closes. We have about a minute and 25 seconds left here on the 2-minute chart. Again, top right of your screen is the 2-minute. If the bulls can hold it together here, I am very interested in a little reversion scalp. Again, we're putting our heads down today, scalping. These are not swings. It's a range market. Not really interested in big swings here today. All right, let's see how this bar closes here. We got 18 seconds. Jeez. Ugly, ugly. Gotta hold off. Next bar. Johnny, 40 to 50 trades a day sounds like high frequency trading. No, not even close. Not even close. HFT firms are doing way more than that. Way more. That is not high frequency at all. It's a lot for a scalper, but that's entirely doable for a human trader. 100 plus for a human trader is, I mean, maybe less so on futures, but that's reasonable on a hot day in small cap momentum. Very reasonable to take 100 plus a day. Again, less so in futures, but 40 to 50 in futures is the high end for a scalper, but that's not high frequency. All right, 53 seconds. Bears are trying to take this lower. We got to remember, range market here, so with little continuation trades on the edges of the range. Again, if I end up putting this on 30 seconds out, let's see what we get. I'm not looking for 100 points. You know, we're looking for scalps, because the probability says this likely is not going to go very far. But how this closes tells me a lot as far as what I need to do here. So if we see a close here in the next 10 seconds, near the low, then I gotta slap on a stop limit sell. Gotta be below that wick. Perfect. I will slap that. Let's see if we get a fill. No fill yet. Give this 10 more seconds. Gotta pull it. There's my 30-second cutoff. Gotta pull it. Nothing yet, but we're never more than 2 minutes away from a trade. That is the beauty of the 2-minute chart. All right, we have 38 seconds here on this 2-minute bar. Let's see how we get a close. If we do get the strongest bull bar we've seen since back here, then for me, I'm looking at a bit of a range reversion. Again, big range day here today. Got to be careful with continuation on the outskirts. All right. Give that about, there we go. We are filled. I will risk the curl relatively tight and see what we can get here. Just need to see a little bit of reversion back into the range. Risk is about 17 points less than 20. If the bulls can actually give us a little follow through after that half decent bull bar. Looking for just a tad more than that. There we go. Pull that there. All right, cool. Kick off the day. Let's move on. Again, range market, so we got to keep these scalps kind of small. A little over $1,000 in the bag. Let's keep going. Okay, the 5-minute 20 EMA, by the way, is at 22,930. So on the 2-minute chart, that's about up here for the 5-minute 20. The 2-minute 20, I'm not as concerned with. 5 minutes up here, though. So let's see if that becomes the top end of this new kind of bear channel. Okay, we got 30 seconds here. You can see big wick. Bears are trying to step in. I would not give this the credit, though. Again, that's the 2-minute 20 EMA. But big wick. So let's see how this bar closes. Slap that, see if we can take out this little bar here and push to the low. This risk would be moderate here, not that big. Okay, gotta fill. Risk that. Leave the limit order take profit down low in case we get news or something crazy. Nope, pop that up for you. If we can take out that low and hunt a few stops. Not going to be a million there because that low is relatively new. Not a lot of time for orders to pile up down there. But there's going to be some. trying to step in. Let's see if the bears can give that low a test. Yeah, the position window, that's contracts, guys. Micros. I'm trading micros. I scale horizontally. Right? Scaling vertically is a fool's errand in the prop world. You gotta scale horizontally. Trade small on each account and scale to many accounts. It's the obvious choice. What's up, Roran? Good to see you. There's always a bull case and always a bear case, right? So the bull case here, which is opposite me, is, hey, maybe this turns into a little ascending bull channel for a little while here. That's the bull case. The other bull case is, you know what? We never really saw a back test of the high end of this overarching intraday range, right? That's the bull case. I like to think of the enemy's case before my own. My own case is, you know, that attempt you see on this wick got wicked down very aggressively. As well as I know the bears want to take out that low. We'll just see if they can. A few stops down there as well. Again, somewhat of a stop hunting mentality, but that level's only really been there for, what, 8 minutes? Yeah, about 8 minutes. So there's not going to be a million stops, but certainly some. All right, about 50 seconds left here on this 2-minute bar. Bit of a sideways look here, being honest. But we gotta see how it develops. We haven't really had a decent close either way since my entry for the bulls or the bears. Really all three of these bars. This one's still developing, of course. All right, 60 seconds left, 55 on this 2-minute bar. Reason I care is, again, have my protective stop up top, but I also am driving manually, so I'm not against pulling things early if I need to. Only if I need to. A lot of people make that decision very emotionally. For me, it's, hey, if there's a setup that I would do the opposite of what I'm currently doing, if I were flat, then I gotta pull it. Cut it, whether I'm green or red. I think a mentality, by the way, like kind of a shift that I think helps a lot of newer scalpers is think of every buy and sell as if you're just flat. Right, so if I'm sitting short and we get bull bar that closes near the high, like here, closes up at, 916 or whatever. Well, I could let it hit my stop, but that's a buy. So I buy. Now the buy doesn't make me long, it just closes my short. And vice versa the other way around. But I think it's important to think of it like this here, closing inside of the previous bar's wick. I would not buy that if I were flat, so I let it sit. Joe, in that example, would you reverse your trade or just close the trade you're currently in? For me, I would just close and look for the next setup to open a new trade. Some traders will reverse. Honestly, with prop trading, reversing is kind of a pain in the ass because it can cause copy trader issues. To do it fast enough to close the current position and then open it while the setup is still valid can cause issues with the copy traders. So for me, I just would say, okay, that's a buy that I would enter long if I were flat. I'm currently sitting short, so I buy, which closes the short. And then I'm sitting flat and I look for the next trade, whatever it may be. You also don't want to come into each day, another big help for newer scalpers. Don't come into the day with a long or short bias. It just doesn't matter. Who cares? Come in with a bias of, hey, range market or trend market. That's the bias you need to come in with. Not long or short. This isn't Wall Street bets. Here's the rollover, kind of another, inside close. Really nothing there, so nothing for me to do. ATR, by the way, in the 2 minute, it's currently about 16. Which is not incredibly low, by the way, for the 2 minute. That's actually okay. It's just the action here is a little bit sideways. Makes it start to look kind of tight. But 16 actually is not too bad for an ATR. Which again, if you're new around here, the ATR just means the average true range. It's the average range of a 2 minute bar. Based on the last 10 2 minute bars. Alright, so let's see what we get here. As far as a close. Again, if it would be a buy, then I gotta close it. Yep, gotta cut it. We'll cut that there. And move on. Okay. A minute 50 out here. Let's see what we get. This is definitely a little bit of a tighter range here, okay? So, I mean, obviously, what would all the algorithms and people draw right now? They would draw that, and they would draw this. We've seen this a million times, right? So we got 15 seconds left. My eye is on this wick here. Pullback. Last second pullback. You see that? Can't do it. No trade. Vinny, Nico, how relevant do you think previous price action is on futures like an hour ago other than high of day or low of day? For me, I'm looking at stops. Okay, the longer after the opening bell, the longer a level has been obvious and present, meaning the more time that has passed since the level got set. Like, for example, here, right? Up top here, right? Then you go stair-stepping from there. This has been a little bit of a newer level, but definitely some stops down here. Right, for sure, some stops up here for people sitting short. They're going to cut it there. Short stops there. Right, long stops here. The longer a level has been present and the more obvious it is, meaning the more people you think see it and they're like, yep, I'm going to use that for my stop, the more interested I am in using it. Derek, how do you keep your edge when the market is this tight? You just got to make the best decisions you can and adjust on the fly if you need to. If you're taking trend bets and you take 2 or 3 trades and you get stopped and you're like, or even if you win, but you're like, you know what, this isn't a trend market, then you got to adjust and start saying, okay, I'm gonna take range trades, which could be the opposite decision, by the way. If you decide that you're gonna go from a trend mindset to a range market on a closing bull bar that you might buy in a trend market, maybe now you're selling the rollover because you know it's a range market. And usually when you start making that adjustment, the day starts cleaning up if it started not so hot. Usually you got the context off, which, by the way, it's gonna happen. It's gonna happen. It's not cut and dry. You just got to do your best to recognize, okay, what's the context on the daily chart, bottom of your screen, right? Range market on the daily. I would not call this a trend market. There's a ton of overlap. There's a good mix of bull and bear bars. So I would say range market on the daily. And then intraday, what are we looking at? Is this a trend market? You kidding me? No, of course not. This is a range market, at least it is right now. So we got range on the daily and range intraday as well. So what does that mean? It means we do a lot of limit order scalping, a little bit of stop order entry scalping if there's room still inside of the range. But when we can, we're using limit orders, usually for reversion. And now reversion means this entire range here. Right, so here, or for example, you know, on this, I think this is where I cut. Yeah, this is where I cut that short. If I were sitting flat, you know, this would be a reasonable little buy rollover. Be reasonable. You'd have to think about the flat top and stuff. But it would be, you know, I wouldn't yell at you for taking that trade. Okay, now you'd say, well, yeah, but we're at the top of this. Okay, but the whole day there's this overarching bigger range. There's a lot to think about, which again is why trading like a 15-second chart is very hard, because you just don't have enough time to think about it all. All right, 25 seconds left here on this 2-minute bar. Let's see what we get. Yeah, nothing. Nothing. Next bar. Terry, any reason you don't check out the other indices? So, ES is ES is great. In a lot of ways, ES is actually a little, people would argue, easier because it tends to be a little less choppy. It's lower price, so when you're on your chart, each tick is a little easier to find with your cursor. But there's, you know, there's another side to that. For scalping, ES, there's that concern where it's like, okay, well, you know, if let's say I enter with a stop, now for maybe 8 points, I need to get 9. Or sorry, for 8 ticks, I need to get 9 to hit my take profit. And that's kind of a big percentage of the trade. Right now, another thing here is commissions. Commissions tend, since the Nasdaq moves a little bit more on the same move than ES, percentage-wise, commissions, which is important when we're scalping, tend to be slightly more affordable when we're looking at like Nasdaq. That's just my experience. When you run the math, they tend to be a little bit bigger chunk on ES. I really, it all moves very similar. As long as there's volume, I really don't think it matters. Pick a product or 2 or 3, learn them and just trade them. It doesn't have to be 1, but I really don't think it should be 15. Kurux, how to deal with drawdown first day alive? Like you would drawdown any other day. What does it matter? You're gonna have drawdown all the time. That's the game. Being able to deal with loss is in a lot of ways, as long as you're able to find edge, what separates the professional traders from people who quit and say, oh, it's a scam, I couldn't do it. No, you just weren't good at it because you don't have discipline. That's the reality. But, you know, dealing with drawdown on day 1, yeah, it sucks. But it sucks every day, so move along. Keep making the best decision you can. Close beneath 895 here in 40 seconds. Within reason, obviously not a giant dump off news bar, but within reason, that'd be a trade for me, so let's see. Come back into the wedge here. Let's get rid of this and just clean this up. Let's get rid of both of these. All right, good close out of the bulls. Still in this little wedge though, if you wanted to draw it. So can't take anything there. All right, 25 seconds here. lot of wicks. Both sides are a little insecure to break this thing out right now. Again, range market, 85 to 90% of breakouts are going to quote-unquote fail, depending on how you define fail. But that's up. Normally, in a normal market, about 80% of breakouts will fail. In this market, it's even worse. So I got to be very, very, careful with these little breakout attempts. All right, 60 seconds here. So, we got to pay attention to this, right? Always think about the look that everyone's looking at. Bulls and bears, not just your side. They're looking at that, so the question becomes, well, you willing to bet against that? In favor of the overarching range, which, if we go back, you can see is much larger. 30 seconds, let's see. Clean this up. Let's see what we get as far as a close. My cursor is on that wick high at 918.50. See that? Closing inside of the wick. Gotta hold off. Gotta hold off. All right, back in 2. right, we're back. 42 seconds left here on this 2-minute bar. Yeah, I mean, you see this, we're getting a slow little grind higher, but a lot of inside closes. This one was a little bit stronger. But I mean, the less strong, when you get this little move upside here, maybe a bull channel, the less strong the closes out of the bull bars, right? Inside this wick. Inside this wick. The less likely I am to buy the highs for a continuation higher, the more likely I am. I still want to get long. But for me, it makes more sense in a case like this to try to buy little pullbacks. So again, you know, what are the bulls watching? The bulls are probably watching something like that. Bears are going to be looking at something like this, more or less. Don't overthink the trend lines, man. Just draw them. Draw them how you think the average of 100,000 people would draw it. All right, we have 40 seconds left here on this 2-minute bar. I'd love to see a push down into this region here. All right, here comes the rollover. Yeah, nothing there. Got to look for the next bar here. Look at the 5-minute. The 5-minute is damn wicky today. I think executing on the 2 is the right choice here today. Mio, I have no idea what you mean, but if you're asking what's the criteria of sizing up from 1 micro, like if you're currently trading 1 micro, if that's your question, the criteria is, do you have edge? If you don't have edge, you do not deserve at all to even trade 2 micros. And I'm not saying that because, like, pay your fucking dues. Like, no, I don't care. Do whatever you want. But at the end of the day, it's in your best interest to trade 1 single micro until you have a predictable edge, and then you scale. Everyone wants to trade, 1,000 minis. I get it. Everybody wants to do that. But if you have no edge, why would you trade anything more than the smallest size you can? Keep your losses as small as humanly possible until you have edge, and then make your wins as big as humanly possible by scaling once you finally have edge. No one seems to do this. It's like no one wants to make money and keep the losses small. Because everyone thinks they're going to make money day one. You can make money quickly if you do the right process, which is developing good data and then scaling. Oh, you're gonna see this big wick here. We got a minute 40 left on this current 2-minute bar. Gotta see how this closes. Trading Chris can confirm. Works great. Yeah, Chris, that's exactly what you did, correct? And it worked well, did it not? There you go. It worked for Trading Chris. Alright, so right now we're basically right in the middle of this range here. I'm not huge on the middle of the range if we can avoid it. I prefer the top third and lower third. Chris, it works so well I almost feel guilty of not having to pay my dues blowing 20 accounts. 20? Man, people come to me and they, like when they're applying for the one-on-one, people come to me and they say they've blown, oh god, I don't even know if I should say this out loud. People come and they say they've blown hundreds of fundeds and thousands of evals and they have not gotten a payout. Which is crazy to me. And then we get them on track and good to go. But man, don't get to that point. That's nuts. No. 8 fundeds? Man, come on. If you're... Listen, even when you're taking payouts, over time, that funded number is going to creep up, right? Because the goal is not to keep the funded accounts for 20, 25 years. The goal is to keep them until they produce you a positive ROI, and then keep them as long as possible over that. And if you hit a losing streak and you happen to blow a funded, it's like, who cares? I got a positive ROI. It just doesn't matter. Right, but 8 is no big deal. Oh, Chris, 8 evals. That's even less of a big deal. All right, 50 seconds left here on this 2-minute bar. Roaring, how does someone not go bankrupt blowing that many funded accounts? Man, there's some, you know, bigger money players throwing money at trading, trying to make it work. And I gotta tell you, that's almost worse. Because they have the money to blow on tons of evals, and it almost turns into like a gambling mentality. And then if I take them on, we get them on track, and thank God, because I think they'd probably keep going if we didn't. All right, that's kind of a small growing bull bar, but it's still kind of in a small wicky middle of the range. So gotta make this thing, you know, again, 2-minute chart, never more than 2 minutes away from a trade, but sometimes you go a little while and there's really nothing there like we're seeing right now. And then it comes and you take 5 trades in 20 minutes. Yeah, you know, Joe, don't worry about it. Once you start taking payouts, this almost sounds like when the gamblers say, it only takes one, man. No, but in all reality, this is a business model. Trading is a business model. You can use the market to gamble, which is why people like to say, you know, you guys are just gambling. No, if you have a business model that has statistical edge, it's the opposite of gambling. You are literally the casino. But Joe, once you start taking payouts, I think you're going to be surprised at how quickly those expenses get wiped. Just right now, focus on making your edge and making the best decisions you can. Taz says, I blew 5 without a payout yet and I feel bad. Come on, man. 5. You're fine. When that's 500, you can worry. But again, hey, keep your expenses as low as possible. Don't blow hundreds on purpose. If you can blow, 8 before you take a payout, fantastic. Your ROI is ridiculous quickly. All right, let's see here. 8 seconds left here. 5 seconds on this 2-minute bar. Yeah, this range here is tightening up a little bit. Getting closer, though. Still, in the middle of this range here. I can't touch the middle. That's algo territory. I'll leave it to them when they have a massive sample size and a much better handle on what their edge actually is percentage-wise in the middle of the channel. For me, as a human being, in the middle of the channel, my sample size isn't big enough to really know. So I have to avoid the middle of the channel. Whereas the algos can pick up those dollars. For me, I can't. I gotta wait till the bottom third or the top third. Mark, my mistake is always buying too many evals at once. You tend to care less about them, so more reckless. Yeah, I mean, listen. You can trade one at a time, and you'll probably care about each individual one more. That is true. I've done it both ways. Copy trade evals, trade them one at a time. I don't know. I mean, I think it's kind of a wash. Because, yeah, when you trade a bunch at once, I guess you care kind of less. But you also, in a way, kind of care more. But if you're going to trade a bunch of them, and you're doing it one at a time, I think that's a good approach, but at the same time, there's also opportunity cost to consider. So if you are taking payouts, spending hours a day for weeks and weeks and weeks on evals, there's opportunity cost. So, personal decision. All right. Extend these out a little bit because we know what the bulls and the bears are kind of looking at. And there's a big old breakthrough. You see that? That's nuts. A 10-point move, man. Monster. Bull's gonna wick that back up, at least try to. And we got 1 minute and 10 seconds left here. Let's see how this bar closes. Could be a trade for us if it closes clean. Yeah, Joe, Joe's talking about the 250Ks, the 300Ks. He says, when I was trying to scale vertically, I did the big ones, meaning trade bigger in just a few accounts. Yeah, for me, scaling horizontally, I have a mix. Right now with Apex, I have some 50Ks, I have some 150Ks, I have some I have quite the mix right now. I have 50Ks, I have 150Ks, I have 100K statics, I have a 250K and maybe two. I have a 250K and a 300K funded with Apex. But I gotta be honest, guys, if you're just trying to get money coming in the bank, you're probably better off just trying to hit a whole bunch of like 50Ks because they're just easier, we'll say, to get payouts. So if you can get 10, 15, 20, 50Ks, and you'll have payouts coming out of your ears if you have any kind of edge. With the 250s, the 300Ks, leave that for down the line when you need bigger, more headroom to scale. But in the early days, just get some money coming in the bank. Maybe hit Take Profit Trader, start there. It's 40% off right now, no activation fee, which is a crazy deal if you use code BIG. But then it gives you daily payouts, which is a big deal. That can help you go full-time the fastest. But then at Apex, man, just get money coming in. I think, you know, the 25Ks even, like Faba said, the 25Ks, they're the easiest to pass, easiest to get a payout on. The 50Ks are great in between. The 150Ks are another great in between. The 250s and the 300s, I like them. I'm a big fan, but, you know, they are harder to pass. And I think, you know, maybe it's not worth the headache if you don't have money coming in yet. Quickest way to get money coming in is hit Take Profit Trader, get a pro account or 2 or 3 or 5, and then maybe get a whole bunch of 50K fundeds at Apex and just get payouts coming in. Get payouts coming in. I mean, listen, if we look at the average American household income, you know, I hate pocket watching, okay? Don't like say unless you really want to in the chat. But I know a lot of you guys, just based on the average, you're probably below that 10K a month mark, okay? That's totally cool, obviously. We've all been there. And 10K a month is good. But with prop, if you do what I'm saying, I think you can get there within very reasonably, like a reasonable amount of time, if you have any kind of expected value doing what I said. You go take profit first and then scale, you know, maybe even some 25Ks, but 50K accounts at Apex. And then once you get over that, you're like, this is more money than I've ever made in my life. Then someday worry about the 150s, the 250s, the 300Ks. You don't got to start there. These accounts, you know, don't go into it thinking I need to have 300K funded accounts that I'm going to have for the rest of my life. That's not the business model, man. The business model is get a positive ROI on each account or as many of them as possible. And then if you blow them, whatever. The ROI was 1.5x, 8x, 75x on that account. You blew it. Whatever. Okay, now it's like, all right, that was a 50. I think I'm going to move up to the 150s. Right? This is a huge opportunity, man. You know, you don't need all the money at once. Just get to the point where you're making more than you ever have in your life. And you will be thrilled. And then you can scale, man. Take this thing huge. Don't stop, you know, at 5 or 10K a month. Take it huge. That's the whole message around here. But for you right now, for all of us right now, taking this big as fuck is going more than you've ever made in your life. And that's different for everybody. Okay, so the 50Ks for a lot of people can get you there. All right, still a lot of wicks here. Trying to hold on to this little range. Alright, close inside of this red bar. Wick high. Had this bull bar closed right about here, I'd be sitting long, but I can't do it right now. Not a good enough close there. Bulls hesitated on that wick high. Alright, a minute 40 out. Let's see if we can get something on this next bar. Yeah, Michael, you know, there's a lot of scenarios here. I think the more you watch, the more you hang out with us, the more you'll kind of understand my style. It's just price action trading. It's really not extremely complicated. It's a lot about applying the ideas that we all kind of know. All the regulars around here kind of know what I'm looking for. It's just applying. The hard part is applying those ideas to the market environment. Because no setup is ever going to be perfect, right? The setups are always a little bit sloppy because the market's different every day. You look in a textbook, you look at your screen, you're like, is it that? I don't know. I'm not big on like the traditional trading patterns. I'm more just a believer in let's go raw to the source price action. You know, Michael, trading is one of the hardest things. I think trading is the hardest thing I've ever done. In this world, you know, this isn't a simple task. I don't care if you've been doing this 18 years, 27 years. I really don't believe there's a stupid question. This is one of the most difficult playing fields on the planet. So I think every question is valid. Alright, let's get rid of this. And what I want to do here is just see this little flat bottom, right? That is definitely there. Then, you know, we also have to consider, right? I'm just looking, hey, what's everyone looking at? Bulls, bears, pigs, right? I mean, what's everyone really seeing? This kind of thing. For me, I'm going to delete this and probably leave it like that. I think that's pretty much what everyone's looking at right now. At least on the bigger scale, right? Don't overthink it. Again, the more you overthink it, the more you get in your own head, I think the less effective it becomes. Just draw the average of what you think everyone's kind of looking at on average. 25 seconds out here. Strong bull bar. Let's see how the bulls can close this. Let's see. I'll give it 15 seconds. We got a decent close. But this is not a 30-second leave on. For me, this is 15 seconds. If we don't get a fill, pull it. 2 seconds. Gotta pull it. Not there. All right, next bar. All right, 48 seconds left here on this 2-minute bar. Let's see if the bulls can get a little bit of continuation and a clean close, or if this channel ends up tightening down. "30 seconds. You know, I'm kind of paying attention to this a little bit. Because I'm thinking if I take a trade here, if we get a clean close, it's obviously going to be to the long side. As we make a push higher above these wicks, but that bear case had to be considered. Okay. Give this 15 seconds. No pullback. No pullback. You guys see that big push? Kind of an outsized bar, one of the biggest range bars we've seen top 2 biggest range bars we've seen in the last, well, 50 minutes. So, yeah, you gotta extend these out. All right, well, we are likely to have a little bit of volatility here, so I'll tell you what. I'll be back in a couple of minutes, and hopefully this volatility that a lot of people are expecting here in about a minute or 45 seconds will calm down. All right, I'll be back in a few. All right, we are back. Okay. So a little bit of trouble up here on that little ascending resistance that we know the bears are looking at. A little bit of trouble. I have day right now, at least after the bell, really only about less than 30 points away. Around 978. All right, 25 seconds left here on this 2-minute bar. Ten seconds. See if we can get a half decent close here out of the bulls. Yeah, I'm gonna place that. I'm gonna place that. We're clear. We'll give that 15 seconds. That's not a 30-second setup, but if I can get a fill in the next 5 seconds here, I'm happy with that. If not, I gotta pull it. Gotta pull it. Couple of those here so far today. Okay, so certainly a bit more of an aggressive bull move, right? I mean, we're getting these bear pullbacks. This here was actually a decent close out of the bears, just for it to reverse and go higher. So for me right now, I could really do both. I could look to buy clean bull closes, but you know, maybe arguably even more so, I'm interested in maybe buying a bear bar closing near its low. Buying the rollover, not selling it. "45 seconds out from the rollover of this 2-minute bar. Let's see what we get. See if this closes as a doji. Yeah. Doji close, can't do it. On to the next bar. Okay, by the way, so ATR is currently about 12.5. Okay, now you guys know what I'm looking at, really. I mean, this isn't an exact science, but a lot of times, if you are leaning into negative reward to risk, it can make sense if the risk aligns, like if the chart works for this, like if the risk is the average size approximately of a 2-minute bar. So I'd be willing to risk maybe, you know, 10 to 15 points on a trade here. And again, scalping a range market like this, you guys know that I think leaning into negative reward to risk makes a hell of a lot of sense. When you run the math, you know, half of a 2-minute bar right now is 6 points. So yeah, volatility is a little bit low. And that seems kind of crazy. I prefer to scalp for a minimum of like 8. Obviously 4th of July, that was a little bit different. Volatility was so low. But I'm not against doing it. All right, 5 seconds out here. Nice bear bar closing near the low. I will put a limit order out. Let's see if we can get a fill. Limit buy. Couple seconds. Not there. Gotta pull it. No fill. Yeah, so for those of you guys asking about the ATR, the ATR stands for average true range. It's the blue line down here. The orange yellow is actually, of course, just the range of each individual bar. The blue line is the average range of a 2-minute bar, and it's based on the last 10 2-minute bars. Okay, now on the 5-minute, it's based on the last 10 5-minute bars. So 50 minutes, whereas here it's the last 20 minutes. Just a gauge of volatility. Helps us gauge, hey, is volatility expanding? Is it collapsing? Based on the average, compared to the average, I should say. What's that looking like? And of course, helps with reasonable risk management and reasonable targets. You know, again, kind of a rough rule for a lot of scalpers is they'll maybe risk about 1 bar to make about half to 3/4 of 1 bar. You might say negative reward to risk. Yes, entirely different conversation, but important to understand that it's a very, very elementary, I think, understanding of trading to say I have to make 2 risking 1. There's a lot of ways to make the numbers work, and mathematically speaking, in a range market, it can make more sense to lean into negative reward to risk. The world is built on negative reward to risk, man. Look at, I think the best example is the lottery. Your state is making a lot of money. Risking $1 to potentially, risking $1 million or so to potentially be able to keep, or a high probability of being able to keep, your $1, $2, $3, $5. Negative reward to risk. Insurance companies, some of the wealthiest companies on the planet, very negative reward to risk. They keep your $500 a month premium, and sometimes they have to pay out $6 million. Now, obviously, our negative reward to risk is a bit more conservative, but same idea here. Remember, there is a limit on Apex. They don't let you go lower than or I should say worse than 1 to 5 reward to risk, which we're not going that crazy anyway. All right, 20 seconds from the close of this 2-minute. Nothing there. Nothing there. Closing inside, of course. All right, 60 seconds left here on this 2-minute bar. Let's see here. There's that recent curl right around 57.50. Yes, gains. Bit of a flat top there. We're watching that. That's what my eye's on as well. You see that pullback inside? Nothing there. Nothing there. On to the next. No, futures are not 24 hours. They are 23.5. They're open 23.5. They close for 1 hour every, like, early evening, late afternoon, depending on your time zone. One sec. Alright, a bit of volatility here. "33 seconds out until the rollover." Ooh, look at that. Of this 2-minute bar. Goodness, that must be a headline, huh? Nothing coming through my news wire yet. All right, coming into the flat bottom here. Breaking through there. Goodness. Trump headline: I will impose a 25% tariff on Japan. No time to get rid of that flat bottom there. There's some volatility. That's what we've been waiting for, huh? Trump, the Japan tariff, again, that's a 25% tariff on Japan, is effective on August 1st. Also, U.S. to set a 25% tariff rate on South Korea goods. That is from Truth Social, as well as Japan. 25% on Japan, effective August 1st. Same on South Korea now. 25% on South Korea as well, effective August 1st. Damn, it's still pushing here, man. That's about a 120-point move in a couple of minutes. Trump says if Japan raises tariffs, they will be added to 25% levy. All right, here's the bulls. Here are the bulls. Yeah, I mean, honestly, guys, even with the fastest retail news source, even if you have a Bloomberg terminal, like, you don't really see a lot of day traders saying, how do you make your money? And they're like, I have a Bloomberg terminal, I get the news, and I make my play, and I make $4 million a year. That's not really a thing, because the algorithms are way faster than you, even with a Bloomberg terminal. You're still a human, okay? You're slow. We're slow as shit, even with a Bloomberg terminal. And news is very 50-50. Very much so 50-50. Unless it's highly unexpected, in which case you're too slow anyway. So let the news, again, don't spend years trying to figure out how to trade news. It's just going to get even more difficult, whereas self-fulfilling prophecy price action trading, I think, is going to get even stronger with the introduction of more and more AI-driven algorithms who are all looking at the same thing. So when news like this hits, man, let it work itself out. Wait for a good setup, which we have not had yet. I would, by the way, have been willing to take a long on this bull bar if it closed. Like, if this wick didn't exist and the bull bar closed like here, I would have bought that rollover. But we got this massive wick and a big wick back downside. At least a third of that bar is wick to the top. So, gotta hold off. Watching this bar now, 1 minute, 8 seconds left. All right, 25 seconds. Have a wick back here. I need a clean close if I'm going to take a trade here. That's not clean. That's not clean. That's inside of the previous bar's open. Market can't decide. Quick heads up, guys. By the way, this Apex 80% off single day pass, which means you can pass today if you want to, though you don't have to. And you get 80% off if you use code BIG, B-I-G. That deal ends in 1 day. Okay, so if you have not taken advantage of that at Apex, I encourage you to do so. I happily buy accounts at 80% off. 90% off is better, but it's far more rare, of course. So that ends in 1 day, and take profit if you're looking to hit the daily payouts. Maybe if you're a little earlier in the journey. Take profit is 40% off, which is also ending soon, and no activation fee, which saves you 130 bucks just on the activation fee if you use code BIG. And then, of course, whatever 40% off gives you, depending on the account, saves you that as well. Okay, 28 seconds here on this bull bar. Let's see what kind of close we get out of this. Definitely a bit of a range here, but a clean outside close gets me interested. We have 8 seconds. Any inside close, though, and I'm not interested. Meaning inside of the previous bar's wick. That's an inside close, not interested. Gotta hold off. Next bar. Tony, ATR on the 2-minute and the 5-minute almost identical. Yeah, that's going to be because the 5-minute is looking back further. So this big volatility is kind of a smaller piece of the average pie, if that makes sense. Which, by the way, that only really happens when you get these big, all of the sudden volatility increases. Almost always the 2-minute's going to be lower than the 5, but in this case, yeah, they could be pretty damn close to the same. Which, you know, again, in and of itself doesn't mean too much, but it's interesting to see that. All right, 8 seconds. This bar turning very much so into a doji. Ugly, ugly, ugly close there. Market very indecisive right now. Here, Joe says big bullish wick on the 15-minute. This is a 15-minute chart. Yeah, I see what you mean. Inside of this previous low on that close. It's interesting. Back to the 2-minute. Okay. We got 60 seconds left on this 2-minute bar. 5-minute, 20 EMA is currently at 918. Okay, this here is a 20 EMA, but on the 2-minute. And again, I sound like a broken record, but I'm not too interested in this. It's just less relevant. It's not as heavily watched. You know, also that 50% retracement right in this region here. Whole bunch of average in bulls. They're finally, you know, they're counting their lucky stars. They're able to sell at break even. That's going to add to this wick. Okay, once those clear, then it's 50-50. What do we do? But the close on this bar can make it not so much 50-50. And if we get that, I'll have to make a trade here. But it's a lot of wick. A lot of wick, man. Next bar. All right, Jason, I got your application, brother. I'll talk to you in a little bit. All right. See that inside close? Can't even close above the previous bar's wick. That's what I'm looking for. All right, Bulls, come on now. Got a minute 15 left. Let's see if the Bulls can give me a reasonable close for me to do something here. All right. 20 seconds. Bulls getting wicked back, man. They are struggling here. 5 seconds. See if they can clean it up at the last second. Nope, they can't. All right, guys, I just recalled this, and gotta be, I gotta stick to my word. So I just remembered that on Friday we said that we were gonna give away a 50K Take Profit Trader test account for free here today to a lucky winner. Jeff, appreciate the reminder here. So let's do that. Again, we're giving away a free 50K test account at Take Profit Trader. So, 3 things, super easy, free to enter. Subscribe to the channel, like the stream, takes 2 seconds. Let me know when you're done. All right. All right, we got 12 seconds left, by the way, on this 2-minute bar. We're doing the giveaway, but I have to trade at the same time. So if we get a close... All right, you see that? Close right inside of the previous wick. So market just wants us to give this account away right now. So, starting right now, thank you all for doing those things. Starting right now, just put in whatever you want in the chat. I don't give a shit, but you will enter by typing enter or I want a free account or whatever the fuck you want to write, just so we have you in the giveaway, and then we will do it, okay? So starting now, write whatever you want in the chat, and we're gonna pick one of you guys live here on stream, and you will get a free Take Profit Trader 50K account. I'm not gonna make you guys jump through a bunch of bullshit hoops. We're just gonna give this thing away and be done. I'll give you guys a couple of minutes to enter. And by the way, please don't enter a bunch of times. If you do, I'm gonna have to pick somebody else. Okay, so if you've already entered once, please stop entering, or else, I am gonna check and I'll have to pick somebody else if you enter a bunch of times. All right, let's see what we get out of this 2-minute bar, by the way. All right, 6 seconds. Let's see if this gives us a quick trade here. Ugly wick back. All right, market's telling us to shut up and give this account away. Okay, so. Let's do it here. Okay. There we go, we can see that. All right. So I'm just going to do what we do, and this is going to be as random as possible. Okay, I don't have a bot or anything, but that's fine. Ready? We're going to spin the roulette wheel, and whoever I land on, don't be entering a million times the last second, by the way. Whoever I land on will get a free 50K test account at Take Profit Trader. You don't even have to use code BIG. Think about that. Ready? We're gonna do this like a 3-year-old would. Now trades, my brother from London. There he is. You are our winner today of the 50K account. All right, we are in. So, now, here's what I need you to do. Join my free Discord, link in the description. It is free. Join there if you are not in there already. And then what I'll have you do is I'll DM you and we'll get you that account, all right? Cool, man. I like giving free shit away. It's fun. That's how we do it, man. We just close our eyes and rip it. All right, Calino. Hey, join the Discord, and I'll DM you and add you as a friend and get that sent over to you. When you join, just say, "Hey, this is Calino." Let's see if this market can give us an entry here. We got about a minute 30. Calino, when you join the Discord, just type in the welcome channel. Just say, "Hey, this is Calino," and I'll add you as a friend. Otherwise, I don't know who's who. All right, we got 25 seconds here. Now, Calino, just type that it's you, man. I gotta add you as a friend first. You can't just DM me. It won't let you. But I will get you added and get that account to you. All right, let's see what we get. All right, I gotta enter short there. All right, so we were sitting short. Let's see if we can get a bit of a push here. Again, bull case here is, hey, you know, maybe we end up getting a little ascending bull channel. All right, Calino, I'm gonna get you added. All right, Calino, I just sent that friend request, so I will just make sure you accept that, and then I'll DM you here and get that account to you. All right, we have 45 seconds left here on this 2-minute bar. Again, I've got my protective orders out. Risk is relatively tight, but I am driving manually here. All right, Calino, I saw that you accepted that friend request. Here's what I'll have you do, just to make sure that no one's trying to steal your account. Obviously, I got to make sure it is actually you. Just send me a screenshot of you logged into your YouTube account just send it in the DM. And that is more than enough proof. And then I'll get that over to my take profit people, and we'll get you that account. Just send that over while I'm finishing up this trade here. All right, a bit of a fall through. Come on, Bears. Need a little more than that. Beautiful, about 13 points. We'll pull that. All right, nice little scalp. All right, guys. I got to get Callan out his free 50K account, test account with Take Profit Trader. For the rest of you guys, the rest of you big losers who will maybe be winners, because we're going to be giving away a whole bunch of accounts here in the future. Make sure you use code BIG, Best You'll Always, Take Profit Trader, and Apex. And I'll see you guys back here tomorrow morning. All right, guys, have a good day. I'll see you soon.